So Rachel, thank you so much for taking the time to come on our podcast. I know you're extremely busy running your company, and I just want to thank you from the bottom of my heart. So,
Yeah,
just to get into it, could you tell us a little bit of like your background and how you got into starting Debbie?
sure. So I actually met my co-founder in college at NYU. I ended up going kind of the very traditional finance route out of NYU. So I worked in Credit Suisse equity research. I hated that job. It was awful. I mean, when I did my summer internship, I thought it was great, and then I thought it would come back and it would be awesome, and it really wasn't. And I think for a while I was sort of working with these, cool tech companies. I was covering them, I was analyzing them, and I was like, damn, I wish I could actually, work closer with them instead of just sitting up here, you know, thinking about whether these are good or bad companies. So I ended up moving into venture, where I spent 2 years. So I worked for a corporate venture fund called BDMI. And there, I was working on sourcing deals, doing due diligence, finding companies for us to invest in. And that was really when I kind of realized it was every step of the way. I felt like I was, getting closer and closer, still kind of sitting up here and analyzing and, determining whether I thought these were good companies or not. But at the end of the day, I never actually was getting my hands dirty. And that's when I felt like I really wanted to work on something, whether it was starting my own company or working at one of our portfolio companies. So back to my co-founder, we met in college, and she ended up graduating with $15,000 in credit card debt. And she went to go work for Marcus by Goldman Sachs at the time, which, their only product was personal loans for the purpose of credit card consolidation. So she drank the Kool-Aid. She was like, we're going to help the average American get out of credit card debt. That was not what was happening. She realized that about 6 months in. She was looking at the data. She worked on the credit risk team and basically saw that more than half of the borrowers were rebounding back to the same level of credit card debt within less than a year of refinancing. And for those who aren't familiar, the way it works is, let's say you have a lot of credit card debt, at 25% APR. You get a loan at a much lower interest rate through a personal loan, let's say 12 or 15%. Now the interest rates are pretty high. And then you essentially pay off the credit card debt with that loan, and now you stop using the credit card. Obviously, that's a big key part of the whole equation. And now you just pay down the much lower interest rate loan that you have. So that's what she ended up doing herself through Lending Club, and why she, really initially believed in the product. But like everything, it was sort of a short-term solution for most folks, because they weren't actually stopping to spend on their credit cards, and then they were getting into like double the debt. So, when she went to her managers at Marcus, she asked them, like, what are we going to do about this problem? And they pretty much told her that these people were irresponsible, irredeemable, they would never change. So the most they could do is, give them another loan to refinance the new credit card debt they just took on, which obviously was not the answer she wanted to hear. So that's when she started venting to me. We were roommates at the time, and we really started thinking about how could we solve this problem. And that's when we, during COVID, we're sitting on the couch and thinking about solutions, and Debbie was it.
Oh, that was a crazy story. Um, just to go back to the start when you said you hated your financial analyst job,
Yeah.
why did you hate it?
Um, so there were a few reasons. I think the biggest one was the fact that, again, for those who don't know what equity research is, it's basically the folks that say buy or sell a stock. They cover a specific sector. I covered enterprise software, so that's Microsoft, Salesforce, Intuit, Adobe, all those companies. And it felt like it wasn't a really meaningful job, in the sense that, I was constantly writing reports. I was sitting until 2 o'clock, 3 o'clock in the morning after earnings, fixing the model, writing up what our thoughts were. And at the end of the day, it felt like, clients weren't talking to us because they really cared what we had to say. They were just going through the motions. They had their own opinion. And we weren't really influencing, or at least it felt like we weren't really influencing what their decisions were going to be. And even if we did, the stupid part was is that they weren't always going to make money, right? Like half the time, my boss's calls were not great calls, and I couldn't do anything about it. Obviously, it was, he made the final call of what he thought was going to happen with the company. But at the end of the day, like, that made the work less meaningful, because we just kind of became like an earpiece for management for these companies. So there was that. The other piece was that In these environments, it's go, 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 go. A lot of times, managers they become managers because they work really, really hard. They're there for a long time and then they're eventually promoted. It's not because they're necessarily good managers. So that's something that I learned early on is like, yeah, a lot of people are going to be put in high up positions and they're not necessarily going to be the most equipped to actually mentor and train and motivate you. So that's what I sought out, I think, in other roles.
Yeah. So I know that like private equity, venture capital, and hedge funds, they're a lot of work. Like I think to get to a position where you make the real money, I think it takes 10 years. Is it? Does it? I think so. I'm pretty sure it's 10 years. Do you think it was like the time and like the effort that you put in for someone else that is why you didn't want it?
Oh no, venture capital I loved. My first job had nothing to do with venture capital. I had always wanted to go into venture capital. This was actually just a stepping stone to get there because unfortunately my accolades were not great enough for me to get a job in venture capital right out of college. Most people don't. They don't. Those jobs don't exist pretty much unless like you know somebody who knows somebody or your dad was a VC or whatever it was. So to me, Credit Suisse was I'm going to do this for 2 years and then I could go get whatever job I want. In venture, I actually loved that job. It wasn't easy to get, but I will say that, I mean, first of all, the lifestyle is much, much better. You have to separate venture capital from private equity. Private equity, you're working long hours. Venture capital, honestly, is a very cushy job, especially as an associate. It depends on the fund, I'll be honest, but for most funds, in finance, it's one of the cushier jobs relative to how much you're earning. It's pretty good pay. You're not in the office till like 9 10 p.m. You're talking to cool tech companies, you're going to events, you're meeting people. So it's a great job to have if you're really trying to open up your mind, meet as many companies as possible, learn about as many industries as possible, make some good money. Again, the one challenge in that role, like in every role, is that most funds don't have a upward mobility, right? So if you come in as an associate level, most of the time, even if you work really hard and you're amazing, you're not going to get to the partner level because the fund just may not be big enough, or they have to raise funds going forward. But it is a really good kind of initial opportunity to think about what you want to do next. So not gonna lie, that job was great, and I probably will eventually go back into venture once I'm tired of building companies.
So then, what could someone do if they wanted to um, get promoted to venture, but their company just wasn't big enough to allow them? Do you think they should just leave and keep hopping to different companies?
Yeah, I mean that's what happens, right? Like the partners, when you're hired, they tell you whether this is a partner track job or not. And people will most of the time accept the job even if it's not partner track, knowing that if they do a good job, they'll be able to go to other firms within the industry. I know folks now who, they have the job that I had 2 years ago and are now interviewing to move up in the venture world to maybe senior associate or to principal at a fund that does have a partner track. And that's usually what they end up looking for once they get that kind of 2-3 year mark. So yeah, it's totally possible, and I've seen lots of people do it. Sometimes they get lucky and the fund grows and they grow with it. Doesn't happen often. It's somewhat rare, but yeah, that also does happen.
So with like so many people moving around, like it's really competitive, and like I'm sure like there are many people in like the top schools, like Harvard, Stanford, Penn. Do they get into the venture capital firms at the start, or they still like don't have much of an advantage?
I would say that most of the people I know do not have a venture job as their first job. Most of the time, they either do investment banking or equity research, or they work at a startup, or they start their own startup. They're somewhat tech adjacent for several years, if not multiple years, and then go get an MBA, and then they start off as like a senior associate post MBA. So you see a lot of times that the venture funds will hire you as an MBA associate. So yeah, I wouldn't say it's common to right out of college get a venture job. Very, very few people I know have accomplished that feat. So yeah, I would say it is competitive, but also a lot of folks in the venture ecosystem aren't looking to necessarily stay in venture. There are a lot of folks like me who see it as a springboard into entrepreneurship, into working for startups, into going into corporate development, right? Going to maybe a larger company where they want to do acquisitions. So there's a lot of different areas and fields that people go into.
So you said some people, but very few do get jobs in venture capital out of college. What do you think people could do right now? Like, what advice would you give to someone if they wanted a venture capital job out of college? Or if you could go back and do it all again, what would you
Yeah.
do differently?
So besides being incredibly well connected where maybe you have an in, right, where like let's say a family member relative is able to get you in somewhere, I definitely think that's less of what happens now than it did maybe 10 years ago. I think 10 years ago is probably a lot more nepotistic than it is today. It's a lot more merit focused. But I would say that the folks that I've seen be able to accomplish that are ones that, were doing this, right? Podcasting, writing, putting their opinion out, analyzing companies, showing that they have a Rolodex of entrepreneurs that they're talking to. Because really, that's what partners are mainly looking for. Because they know, like, a lot of times they're older, they're not necessarily plugged in with, like, what's the cool new thing. A lot of their peers are their age. And so a lot of times they're looking for associates to be the ones who are thinking about what are the next trends, like what's on the cutting edge of what's happening in the world. So if you are writing about that, you're tweeting about that, you're podcasting about that, and you can show that you know these people, that is definitely I think a huge leg up if you're trying to do that.
So it sounds like it's a lot of networking.
Yeah, pretty much. Pretty much a lot. Or listen, you can also start a startup and do the painful work of doing that. The other folks I've seen be able to join a fund are ones that, they start their own company and maybe they get that fund as an investor somehow. And then eventually, either they sell that company or they burn out or whatever it is. And then they join the fund because they like them. So.
Oh, that's that. So people actually just like start a company and then they go into the fund.
Well,
But
they're
then
not. They're not
wouldn't the
starting
fund
a
manager
company.
just think you're not a very good like employee to work with because you couldn't even run your own company?
Not necessarily. Just because a company didn't work out doesn't mean that you were a bad manager. It could have been bad timing. The market wasn't ready for the product. There's a whole host of reasons why the company didn't work out. And only some of them are bad management. So yeah, obviously, like if you burn through a ton of cash and you weren't good with the money, you couldn't like you didn't do everything you could to figure out what was going on or how to propel the company. Yeah, then they're probably not going to hire you. But, if you're forthright and you're honest and you work really hard, then yeah. But I would say most people don't go start startups with the goal of using that as a springboard to enter venture. It's they're starting a company because they want to be entrepreneurs, and then somehow the opportunity presents itself that, they've learned all of these things and some venture fund convinces them that they should go and, invest in companies, and they end up doing that. So I would say it's not really a strategy. It's not like, when kids think about, oh, I'm going to go into investment banking, not because I want to do it, but because like it'll give me a lot of opportunities later. I would say that starting a startup is not, I would not suggest that as like the alternative to investment banking. I think it's far more difficult. You're putting in the same hours. There's a lot more obstacles. Obviously, you're your own boss, but the at least when you go into a corporate job, they tell you what you have to do, and it's a lot of work, and you do it. It's like it's clear cut, right? You're kind of doing monkey work, versus at a startup, you got to be really creative. You got to think about how to fix problems constantly. So, I mean, I would only suggest it for those who really actually want to do that, like that's something they're passionate about doing.
Do you think there's like a specific personality that's like optimized to be good at starting startups and entrepreneurship?
I don't know that there is. I will say this. I am actually not the personality that I would think would be good at starting a startup. I'm not that crazy person, adrenaline junkie, risk taker. I'm actually very scared of risk. My co-founder, on the other hand, she is the crazy person. So even though that's not me, she pulled me in and she's like, Rachel, you're doing this with me. So like, for example, I've always surrounded myself, or I've tried to surround myself with people push me because I know that I wouldn't do it on my own. And there's a lot of folks that go out and try to start startups on their own, and maybe they're crazy, but they're not motivated, or they're motivated, but they're not, but they're not risk takers. And so I think you do need both. And if you're not both, then you need someone else to kind of marry those I guess traits together. That's why I do really believe in the power of having co-founders. There is a very rare breed of person that is both highly motivated and highly risk-taking, like folks like Elon Musk, for example. But yeah, I don't think that's necessarily, you need to have that. Because I don't think you need to be like a solo founder.
So talking about needing a co-founder, it basically just comes down to networking. Do you have like any advice for people who are in college who want to get want to build their network? Like for example, both of us, we're still in college, we're freshmen, and a little advice on how to make some new friends would help.
So my co-founder was actually my best friend in college. She's still my best friend now. I was actually nervous about starting a company with her because I was like, I don't want to now potentially destroy our friendship because now we have this business relationship. But I also realized that, throughout college, we were always in classes together. We always worked on projects together. We started shit together then, and we were really successful doing it. And so she's Israeli. I'm Eastern European. So like both of us we argue a lot. But I think both of us are the kind of people that like, if there's a conflict or we disagree on something, we take it to a third party. We're like, okay, which one of us is right? And then if that person says then we both agree. I'm wrong. I give up. It's fine. So yeah, I mean, I got lucky that she happened to be my best friend, and I also happen to think that she's super intelligent and super motivated and an amazing person to work with. The one challenge that we had between the two of us is that neither of us were super technical. So I was good on the sort of finance, modeling, operations, legal side, and she was good on the product and data side. So she had some coding background, but she couldn't like build an actual, tech product. So that finding the technical folks, that's what I would say is usually the biggest challenge for folks who are entrepreneurial that aren't technical. So we ended up going through, I forget the name of the guy, but he had a co-founder matching list. It was a partner from Andreessen Horowitz, and we ended up finding our CTO there, our initial co-founder, and initially worked out for us. So that you just got to look everywhere. You got to reach out to people. You got to interview people. It is a challenge because usually technical people, when they're coming in that early, they usually want to start their own thing. So it's hard to convince them that your thing is the thing they should be working on. But it just requires a lot of time and energy and effort, just calling people and finding the right fit. That's any other questions on that?
I just want to say.
But I would say while you're in college, sorry, one last thing I'll say. My one big regret was not making more friends with engineers in college. Go like wherever, like the comp sci majors, like go take some comp sci classes, even if you don't want to major in it or minor in it. Go meet some people there, take them out to lunch, like go be friends with them. Maybe they won't be your co-founder, but they probably have friends who might be interested. So start, if you're not technical, start building your network in college. Start building that network early.
Yeah, I just want to take a couple steps back. I know you said that your co-founder was venting to you about the issue, but did you ever have like a procrastination period where you were like, oh, I want to start this, but I don't know how to, and you kind of put it off? Or did you just dive straight into it? You knew what you wanted to do, and it was just like a smooth process for you?
It was neither. So really what happened was we kind of sat around for about 6 months doing what we call research to like get ourselves prepared. But really what we did was we committed to working on the project every Sunday. And what that meant was, like I said, doing research, calling people, getting to know people in the fintech industry, putting together, a pitch deck. There were a lot of things that we were doing in the meantime, looking for kind of UX, UI designers who could put together a prototype, things like that that don't require you to pay money. The biggest issue for us was money. At the end of the day, for us to actually get started, you have to invest some capital, and I don't think we were prepared to do that yet at that time until we had really understood this is the plan, this is what we want to build, this is the exact idea, this is how we're going to pitch and frame it. I would say we spent about 6 months doing that. But back to the co-founder thing, I think it was really important that we had each other, because if it had just been me, I would have procrastinated until the end of time because I would have been too scared to do anything. Meanwhile, I'm messaging her every week saying, hey, did you do the thing that you said you were going to do? And she was doing the same with me. So we would give ourselves tasks, and both of us would be accountable to each other to completing it. And so I think that I'm trying to remember what was the catalyst for her eventually leaving her job and starting on this. I think she basically sat down and did the math and tried to understand how many months of cash did she have to sustain herself. She's like, okay, if I can have 6 months of cash, and she knew, like, if she went back out into the workforce and tried to interview, she would get a job super easily. She actually had interviewed at another company. She got an offer, for more money than what she was making, just to like make sure that she was good. She ended up not taking that, obviously, because she started the company, but she's like, I'm going to do the math and I'm going to quit my job and jump into this. So she jumped in first. She wasn't upset at me about that I didn't, because I was essentially bankrolling the company. So I kept my full-time job. And I started like paying for our designers and all of the development work that we were doing. I was essentially paying out of my salary, because she was using her savings to pay for her rent and food and groceries and all that stuff. So we were both contributing in different ways. She was contributing her time and I was contributing my money.
How how can someone know it's the right time? Because you said that she knew it was the right time to just quit her job and start. How did you know it was the right time?
Yeah, I mean, she had tried to bring this idea up to her managers and they were not responsive to it at all. I think she also realized that she had learned everything she wanted to learn from her job. And she really, really wanted to start a company. She was really, both of us were really passionate about this problem and wanting to, go in and solve this problem. So I think, once she felt like she had enough money, again, for that kind of 6 month cushion, she was like, all right, I'm going to be good for 6 months. We're going to work on this for 6 months. If we don't raise money, outside capital, by the time I need to go look for another job so that I can, sustain myself, then we'll stop this. We'll put a pause on this. But she's like, I feel good about this amount of time for us to get done what we need to get done.
So it sounds like the best strategy is figure out the amount of time that you think you need to launch and then pitch, and then have the funds to do that. And then if it all goes to shit, then you can just go back to your old job.
Yeah, I mean, like I said, it's really tough if it's just you, because not only do you need the cash to sustain yourself, you also need the cash to pay for all the other auxiliary things that you might need, like a designer or developers or whatever it is. So if you're able to get all of that for free, awesome. And all you need to do is pay yourself, that's great. So then I would have like six to 9 months of cushion, especially, we're young. So it's not like we're in our 30s and worked for a bunch of years and have like a nest egg saved up where we could just like not work for a year. So that's kind of how I would think about it. But again, the idea is like, you really, really, really want to do this. It's not about finding the right time. It's about building up that cushion for you to be able to go and do that. And she wouldn't have been able to do that. Sorry. And she wouldn't have been able to do that if like I said, if I hadn't kept my full-time job, if I wasn't, contributing my part to the business as well.
Speaking about nest eggs, I was on the Debbie Instagram, and I think I saw that you managed to save 60K in your 401k in 3 years.
Yeah.
Like,
so
what advice would you give to someone who like wanted to save your money or like
yeah.
get better at it?
So my luck, despite the fact that I didn't like my job at Credit Suisse, they had a really, really good matching program. So they matched 100% of anything I put in. That being said, they did, it did vest over 3 years. So if I left any time before 3 years, I would only get whatever portion of that, how many years I was there. So after I left Credit Suisse, I think I probably had, I don't know, like 30 or 40K in there, some crazy amount. So my suggestion is, I mean, obviously, if you have multiple offers out of school, amazing. Definitely, think about whether 401k match is a big benefit to you. If there's companies, all else being equal, you like the teams, you like the work and everything you're doing, and they're the same salary. If one of them has a better, matching program, that's something to think about. And I maxed that out. So I think I was contributing anywhere from 10 to 15% on average from my paycheck. So I was maxing that out. Also at the time, the market was doing super well. So I had most of my investments in like target funds, but then I had some software stocks that I was putting it into as well. At least after I had left Credit Suisse, because while I was at Credit Suisse, I don't think I was allowed to do that because I was covering those companies and it would have been a conflict of interest. But after I left, I did start putting my money into the software stocks that we were covering that I really, really liked and that I believed in. And before tech winter, those stocks did obviously really well. And even now, some of them have rallied as well. So that's my suggestion. First job, put 10 to 15% of your paycheck, especially if they're matching. It's free money, so take it.
Speaking about investing, do you have any investing advice? Or like, what's your strategy?
Okay, I am actually not the best investor, I would say. I'm really bad at timing. So anytime that I have tried to invest based on a trend, like a short-term trend, I've lost money. Whether that was like cannabis or I don't know, there were other things I was thinking about. The only time I've made money is if there's a company that I really believed in, I really love their product, I really love what they do, and I think there's a lot of growth opportunity. I invest. I don't look at I don't really think about the price. I invest, and then I just don't look at it for like 5 years. And that's the only way that's worked for me. So I think about investing. So unless I'm obviously, if the company is really floundering, management's really bad, or there's a product that's really not working, or there's a big competitor that's completely crushing them, then that's obviously a real shift in what's happening in the dynamics of the company. But if it's just news or random things that or the market that's affecting the company, I don't worry about that. I don't think about sort of rebalancing that, because I'm like, okay, this company I know is solid, and eventually it'll come back. That's always been my perspective, because like I said, I'm horrible at timing. So if I sat there and tried to figure out when was the bottom or when was the top, I would fail.
Yeah, I think that's a big thing in investing. You cannot, or the Warren Buffett strategy. It's just value investing,
Yeah,
but you have to value a company and see how much it's worth.
yeah.
And you have a background in financial modeling, right? So what do you think is the best way to analyze a company and see how much it's really worth?
That is a good question. So we used to base a lot of the way we would analyze companies, at least when I was in equity research, on multiples. And that, I mean, I think it's a good way of telling what it is worth relative to other companies and if it's overpriced. The only problem is that when the entire market is going up, it doesn't really help. So that's what happened in tech, I think, for a while, was we had an opinion that all the stocks were overvalued, which wasn't wrong, but it was about timing, right? We knew that eventually it would have to come down, and it did, but it came down 3 years after, 4 years after we had made that call. So that's kind of the issue, is that you can make that call, but you don't really know when it's actually going to play out. I would rather think about, instead of thinking, I know he likes to invest when it's, obviously when it's cheap. I would rather think about, what is the growth potential of this company, right? Is there a product or is there a service that this company is working on that I believe is going to increase the value, that's going to make this a much bigger company? That's how I like to think about it instead. Yeah.
So then I just want to go back to when you said that your co your partner in this, she left when she knew she had the money to saved up and she had the necessary skills that she thought she needed.
Yeah.
What skills do you think I needed? Like, what skills do you think are important to learn?
Yeah, it wasn't so much skills as it was knowledge. So the things that we both needed in terms of understanding this industry, I mean, okay, so just some context. I didn't really talk about the company, but Debbie is a rewards platform for debt payoff and savings. So we built an app that essentially pays you cash for, paying off your debt and saving money. So think of it a little bit like Built, the way Built rewards you for paying your rent. It's an added benefit. We pay you to do the right thing with your money. And the reason why we did that was we realized that positive reinforcement was one of the strongest drivers of behavioral change. When you think about the world of money and finance, all the ways that financial companies try to get you to change your behavior or influence your behavior is through punishments, right? They do overdraft fees, late fees, they ding your credit. The only time they give you rewards is when you spend money on your credit cards, which is not exactly the big, the best activity. So we really thought about it in reverse. We're like, how could we reward people for doing the right thing? So then, going back to your question, what did we need to know in order to build this company?
I'm sorry to stop you there, but how do you pay them?
With
How
cash?
do you pay them back?
Meaning, where do we get the money to pay them? Is that
Yeah,
what the question is? Yeah. So
yeah.
our model is a little bit like Credit Karma. So we, as they go through our program, as they meet their debt payoff and savings goals, as they go through our curriculum, and we built a curriculum that's like Noom for finance. So rather than teaching you financial literacy, it digs more into the emotions and behaviors of money to help you understand your habits. As they go through that program, they earn points towards cash, but we also surface personalized offers. So going back to the debt consolidation piece, we surface them, offers to consolidate their debt through our unique network of credit unions. The reason why we work with credit unions is because their interest rates are significantly lower than most other financial institutions. So they're way lower than SoFi, Lending Club, Chase, all of these big banks. But young people today don't have access to credit unions, one, because they've never heard of what the fuck a credit union even is. And number two, you can't just like go apply and get a quote on their website. Usually they do a hard inquiry. So we do that hard work for you the same way that Credit Karma does, where they show, you have a high chance of approval. We get their credit policy from the credit union. We know, whether they're likely to approve you or not, so that you don't have to go through and potentially get that hard inquiry. So we've built out that marketplace. We also show savings offers, so high yield savings and that sort of thing. So we generate revenue from that. We pay that back to the consumer.
Do you borrow money and then you pay them?
No. So essentially, the user has to get to $50 in order to cash out, and usually by then we will have monetized. We will have monetized users in order to pay that.
How can you monetize the user? Is it like a subscription?
No, meaning they will have taken out a loan, or they will have taken out a savings account, or they would have done some affiliate offer in order for us to have been able to pay, all the users that got to that cash out threshold. So typically someone's not getting to that cash out threshold until 3 or 4 months down the road. We will monetize them before that, typically.
Oh, that's so it kind of works like you teach a course and then like if you tell them to sign up to this thing to help them check their credit score, then you get a little bit of that. Like,
Precisely. Yeah, so you get points
oh,
towards cash, but that cash you have to get to a minimum threshold in order to
oh,
cash out. And it takes
that's really interesting.
some time for you to get there. But our cash out threshold is $50, and a lot of folks have now been cashing out. I don't know the exact number, but we've paid out now probably close to like $60,000 in rewards to our users. So
Oh,
yeah, it's real money.
damn.
When we
That
first
this
started
is
though, yeah, when we first started though, we were not generating any revenue. So the goal was it was purely an experiment. We told ourselves, well, when we first started the company, actually it was going to be a totally different product. The product that we wanted to build originally was we wanted to build a new type of debt consolidation loan, or personal loan, where the APR, the interest rate, would come down automatically over time as the borrower improved their financial behavior. So what we ended up doing, instead of burning a ton of cash on a lending business, was we said, let's do an experiment. Let's allocate $100,000 of our initial fundraise, which we didn't end up using all of that, but let's allocate a significant amount of money towards rewards for people paying off their debt. We'll ask them to link their accounts via Plaid. We'll track how they perform. And it was essentially an experiment to see, like, does this actually, does incentivizing people to pay off their debt actually work? And are they going to be, more creditworthy, less delinquencies, that sort of thing. And what we saw was that people were paying off 3 times more debt, and they were paying it off faster. We're like, awesome, this shit works. So now let's go build a lending business. And around the time that we went to go raise money to build that lending business last year, interest rates shot up. And it made absolutely no sense to build the original business that we wanted to build, because the rates, we would have to borrow money essentially to lend money. And the interest rates that we were getting now are close to 16, 17%. In order for us to make that profitable in any way, to pass that on to the consumer, we would have had to charge them upwards of 25% APR, which was not a world that we wanted to live in, and it didn't make sense for debt consolidation. It would have been super low, low credit score people and that sort of thing. So we said, scrap that. We're not going to build that. We're going to figure out how do we get that product into the hands of consumers without us funding the loans. And that's really where we found credit unions, and we fell into the world of credit unions because we realized there's this untapped source of capital that is at very low rates. All credit unions are nonprofits, so there is a cap on what they charge to the consumer. It's generally much lower than traditional financial institutions because they really care about their customer. Now, they're just way more old school, which is why most young people don't know about them and don't open an account with them. Most young people go for like SoFi or Chime or whatever it is, or the bank account that their parents set up for them when they were 18. So our goal now is helping to open up that world to the young consumers so that they see the benefits. Because across the board, whether it's to buy a car, to buy a house, any kind of loan, you're going to get a significantly cheaper rate at a credit union.
Oh, wait, so could businesses, like other businesses, use credit unions as well to
For small
fund
business
whatever
financing,
they're trying to do?
yeah, the same kind of loans that you could get at a traditional bank, you can get at a credit union. I will say that typically their underwriting criteria is a little bit more narrow. Like they do require, higher credit score, or if you are a lower credit score, they do require, other things where, you don't have a lot of missed payments or things in collections or things like that. But the thing is that they're, at the end of the day, they're community development financial institutions, a lot of them, CDFIs. There's a lot of credit unions that qualify as CDFIs. So their goal is to really help the community. They want to help their regional community grow. And a lot of credit unions are regional, so they'll focus on New York State, or they'll focus on firefighters, or they'll focus on a certain employer or that sort of thing. There are some credit unions that are nationwide, like Alliant, that they serve, the entire United States. But most of them are really there to serve their community and to help their community flourish. So if you're a small business that, is seeking financing, I would say credit unions are an awesome way to go.
Are there any specific ways you should go about that?
To find one, there is a
Yeah.
website. I think the NCUA website, if you search the NCUA on Google, I think they have a tool called Find My Credit Union, and basically shows you here all the credit unions in your, near your zip code that serve you, or ones that are nationwide. So you could definitely look that up if you'd like. I would go for perhaps one of the larger ones because they usually have, more technical expertise. They usually have an app, a mobile app, or better, online banking and that sort of thing. Some of the smaller credit unions are very, very far behind, technically speaking. So, for example, when Frida, my co-founder, lived in Detroit, she bought a motorcycle, and when she went to the Honda dealership to buy that motorcycle, they tried to give her a loan, to finance it at 17% APR, which is ridiculous. And then she went to the local credit union in Detroit, which was like this dinky little branch. She had to fill out a paper application. It was not an online form. Some dude looked at her application, he's like, hold on, went to the back, spoke to his manager, went back and forth to figure out, and they came back and gave her a rate, and that rate was 4%. So
What?
yeah. So this is the magic. So you could get a way better rate. It is like she literally went to a branch and filled out a paper application. Like, what young person today is going to do that? So a lot of these folks, a lot of these credit unions need to catch up. But at the end of the day, like, that's a huge savings. That's a ton of money that you didn't just pay to the Honda dealership for absolutely no reason. So that's really what we're trying to digitize and help consumers access.
Do people ever arbitrage that?
Well, that's what we're trying to do, right? So for example, when you think about deposits offers, opening a checking account, right? Chase will pay you $300 to open a checking account instead of direct deposit. Citi does the same thing. There's offers all over the place for you to do that. Credit unions don't do that. And the problem for them right now is that they need deposits. They just lost a shit ton of deposits this year because a bunch of money moved into higher yield assets, or people were spending it, and so it just left their bank accounts. And all of them are like, crap, we need more deposits. We need people to bring in money. But they're not out there like Chime and Citi and Chase offering $100 or $300 to open and fund an account. That's where we come in. So you come to Debbie, you open an account with Michigan State University Federal Credit Union, we pay you $20. We get $20. They pay us for an account. So we arbitrage on that. Same thing on, I would say, the lending side. So they pay us a certain percentage of the loan for us to make that referral. So we make on average anywhere from $200 to $600 per loan. We're super transparent with that to the user, by the way. So when they, go through our curriculum, we tell people this is how we make money. FYI, we are still helping you. We're not pushing you products that we don't think that you would benefit from. We're only pushing you things that we know that you would want. And we've had crazy demand. So the feature is called Rate Crusher. So that's where you can lower your rate. We've had insane demand for the product. So yeah, that's pretty much the game that we're playing.
How many users do you have now?
So right now we have a wait list of at least we've had over 20,000 signups at this point. We've gated the amount of users that have come in, so we have a little over 3,000. The reason for that is because we're building out our credit union network, our financial institution network, so that we don't have to pay a bunch of money to onboard people that we then can't monetize. So that's the goal right now, is bring on more credit unions, and as we do that, we slowly start bringing more folks on. The good news is we do actually work with a credit union that goes nationwide, and that they want folks from everywhere. So now we do have the ability to start bringing a lot of folks off of the wait list, which is great.
So if people want better loans, they should just go to Debbie.
Yeah.
Sign up.
Yeah, sign up. And if you want to earn rewards for paying off those loans, so rewards for doing shit that you're already doing with your money, sign up for Debbie.
How did you come up with this idea? It didn't happen all at once, right?
No, it didn't.
Definitely was like iterations.
Yeah, well, like I said, the initial idea was a loan that had this sort of behavioral angle where as you improve, the APR would come down. So the idea was build incentives into actual financial products. And the original cash rewards for paying off debt was just an experiment. It was just that the experiment worked so well that we said, let's just continue it. Why reinvent the wheel if this already works? So that was really what ended up happening, was the experiment ended up turning into the product. And then we built on top of that as we learned. So that's, in terms of adapting, it was really scary because we thought we were golden, right? And you think about 2 years ago, how easy it was to raise money. I'm going to say easy as a relative term. Obviously, it's not easy for everyone to raise money, but I would say 2 years ago, there was so much money everywhere. It was flying around. It was going to companies that didn't have a product, didn't have any revenue, had basically nothing, just a paper napkin idea. I mean, we got funded with a pitch deck and a non-functional prototype. It was like a Figma prototype. We had nothing coded, and we got funded with that. So it was easy money times. And we thought, and based on my experience in venture capital, my understanding was you could raise a seed round just with a bunch of users and really, really good engagement and a wait list. That was all you needed. And so when we went to raise our seed round, with that, we had reached all of those metrics. Every fund told us that they wanted to see revenue. So the bar, the standard of what was required for us to raise a proper seed round had been elevated dramatically. And that was just because of the changing market conditions, right? The market went to shit. stocks went down. A lot of startups within their portfolios, within the fund's portfolios, started getting repriced. Their valuations started to come down. Hair was on fire. Companies were going bankrupt, and so yeah, they started to up the bar of what they were requiring, and so we had to change our strategy completely at that time, and it was really scary because we didn't plan. Like, we planned our cash in a certain way, and so then we had to figure out another plan of how we were going to fund the business and how we were going to reach metrics that were going to excite our investors for them, enough for them to give us more money. So yeah, that was the challenge there of adapting.
So you talked about the economy. Where do you think the economy's going right now,
I
like in
think
the
it's,
U.S.?
yeah, I think it's going to get worse. So right now, you look at the banks and you look at our government, and they are painting a rosy picture, and they're trying to make it sound like everything's okay, unemployment's really low, jobs are being created, and that's true. Unemployment is really low, inflation's starting to come down. All of those things are true. The one problem is that I'm seeing is that credit card debt just hit over $1 trillion in balances about a month ago. It's the highest it's ever been, ever. You think about overall consumer debt, it is a record high currently. And so at some point, it has to hit a tipping point where that debt needs to be paid. And I'm not just talking about consumer debt, you think about government debt also. We're now at the highest levels of government debt we've ever had. And it's not something that we can sustain. We're past that tipping point. So my biggest question is what is the catalyst, right? And you think about 2008, you had all of these bad loans, but there had to be a catalyst that actually made everything unravel. That catalyst at the time was variable rates. So all of these people that started off on pretty low interest rates for their mortgages, they were making their payments and everything was good. And then all of a sudden, their interest rate shot up because they were on a variable rate loan, and all of a sudden they could no longer make their payments because their mortgage payment shot up, in addition to the interest rate. And so you had a ton of people who weren't making their payments and had their homes foreclosed, and then the banks started shutting down because they weren't getting paid, and it was a whole thing. The problem right now is, what is the catalyst? Is it, I don't know what it is. In my mind, I always thought perhaps it's student loan repayments, right? All the people that haven't been making their payments over the last 2 years, they've been basically pretending like that debt doesn't exist, a lot of them, and they filled that part of their budget with something else. So it's not that they were saving that money for the most part. They ended up spending whatever money that they weren't paying to the government, they were spending in other ways. And so now you have a stat where, I think they asked a bunch of Americans, they said, 53%, I think it was 53%, it might be even higher, of Americans, again, don't quote me on that stat because I don't remember exactly what the stat is, but a majority of Americans today who are surveyed who have student loan debt said that they will have to choose between their student loan payment and buying groceries. That's crazy. So what that tells me is people can't afford to pay whatever their student loan payment is right now. There are options for that. They can move to income-driven repayment, which is essentially paying a percentage of their income, which should significantly reduce their payment if they are lower income and they have a lot of debt. So that's an option. But if that's not an option, pretty much the only thing the government can do is just keep giving people, grace period after grace period to figure it out. But that's also inflationary, right? That's basically giving people money that they didn't have before, or continuing the trend the inflationary trend that we've already had. A lot of the inflation problem came from the fact that people weren't making their payments. They had all this extra cash, plus the government gave them stimulus checks on top of that. So you had like a double whammy of just like a bunch of money flowing in that people didn't have before. So I'm not too confident. My only problem is, again, with the timing. I just don't know what that catalyst is going to be. It could go
So
on.
let's say the American economy starts taking a little dive, like a little dive. How can someone protect themselves?
Have an emergency fund. Have some cash saved up. I know there's a lot of people who talk about gold. I don't know enough about it. I want to learn a little bit about it because I know they talk about it as a hedge. Again, don't quote me on it because I really don't know enough, but something to look into. For me personally, it's about having some cash saved up that I feel like I can have some time to figure it out and not be stressed and anxious about what's going on. Because at the end of the day, I do think we're in a place where we need people to work. You know, there are jobs available. I don't know what's going to happen in the next 6 to 9 months. I could be wrong, but yeah, I would say emergency fund is the most important thing.
You talked about gold. What do you think about crypto and Bitcoin?
I'm not super positive about it. And that's just because I never really understood it as like a store of value. It's not used to transact in any way unless, you know, it's for illegal stuff. So I don't find value in that personally. And for other things, you know, thinking about it otherwise as just like an asset, as an investment, there's nothing backing it. There's no inherent value to it. It doesn't produce cash flows. It's not a business. It doesn't, you know, it's not even like aesthetic. You know, you think about like a painting or art or wine or other collectibles, other kinds of assets that have value. At least like you can look at a painting, it looks nice. You could drink a bottle of wine, a watch, again, like it gives you some value on your arm. Like you like looking at it, tells you the time. I don't know what crypto actually does if I'm not using it to transact. So I've personally never been super positive about it. I've also never made money on it, again, because I'm one of those people, I can't time markets. I just put my money in things and then hope that 5 years later I make more money. That has not worked with crypto. Maybe it worked if you would have invested whatever 15 years ago and then taken your money out like 5 years ago, but I missed that boat. And I don't think that my money is going to be made back in the next 5 years either. I don't know that this is a growing thing, mainly because I think that people will always use it as a speculative market, right? Even 4 years ago, there was a big crypto bubble 4 or 5 years ago that happened when I was in college, and everybody was talking about crypto and everybody was talking about blockchain. And then it took a dive and then nobody spoke about it for like 4 years. And then it came back a year ago. And then I was like, wait, this is like deja vu. It's like the same shit all over again. And it went crazy all over again. And I was like, should I do this? Should I be part of this? And I'm like, it's the same. It's going to be the same thing that happens because it's all speculative. It's all people buying things they don't understand, buying NFTs, some stupid piece of digital art that doesn't do anything for them. It doesn't even look good. Like, think about aesthetically pleasing. Like, a Bored Ape is not aesthetically pleasing to me. So yeah, but that's me. I know there are people who've made tons of money on crypto, and that's amazing and good on them. I've just never been able to, and so I poo-poo on it.
So, just going back to your college, you went to NYU, right?
Mm-hmm.
How do you think someone can make full use of their education? Did you have to take loans or?
I did. I will say I was very lucky in that my parents made a lot of sacrifices for me to be able to go to college. So when I was applying to colleges, there were some colleges I got scholarships to that I was planning on going to, and my parents said, absolutely not. We want you to go to NYU. This is the best college for you, and we'll pay for it. And I was like, okay, are you sure you can afford it? And they were like, we're going to take money out of our 401k. So that was their plan. Their plan was to basically take out of their retirement in order to fund my college education. I did not think that was a good idea, but they didn't really give me an option, and they really insisted on it. And I was, I wasn't going to push back at 18. I really did want to go to NYU. So I reluctantly, I was like, yeah, okay, fine, we'll do this. After my first, and it worked out the first year. After my first year of school, my father got a stroke. So he was no longer able to work. He did go on disability, but he was getting paid, 60% of what he was making before, 50% of what he was making before. My mom, I think, had lost her job at that time as well. So obviously they were in a very different position at that point. And it was much more difficult for them to pay for college. So I had gotten a transfer option to go to Cornell, and I did not want to go. But I did want to use that as leverage to go to the dean and ask for a scholarship. So basically
Did you say Cornell?
Yeah.
Okay.
So I used that as leverage. I did really well my first year of school, and I played tennis on the varsity team, and I was really involved in different clubs. And I said, okay, maybe I'll go to the dean and basically beg her for money and go to every possible organization on campus and beg them for money and tell them a whole sob story. And I was such an idiot because I went to the dean's office, and I'm like shocked that she even took a meeting with me, but she took a meeting with me, and I was sitting there with her, and I told her the whole story, and I was like, I'm gonna have to transfer if, you can't give me anything. And she asked me how much I wanted. And I very stupidly gave her a number, and I should have just asked her first, like, how much can she offer? I just told her 15 grand a year. She was like, done, we can do that. And I'm like, I probably could have got NYU Stern, their endowment is massive. I probably could have gotten at least half my tuition paid for a year at that point. If I was already in that room negotiating, like I did not understand how to negotiate at that time. That being said, I did still have to take on loans because NYU with room and board and tuition and everything was like 55 grand a year. $15,000 wasn't, I didn't have any scholarship before that. So $15,000 a year like was nice, but there was still, 35 grand gap to fill. So part of that I took on loans for, and then the rest of it, my parents, figured out how to pay for. To be honest, I probably should have looked into private student loans. I didn't know enough about it at that time. I was very stressed, also running around to every organization trying to get scholarships. And my parents kept assuring me that they would figure it out. So I kind of just trusted them and relied on them. But I was able to pay off, I didn't take on that much debt. It was probably, I don't know, 20,000 total or 15,000 total, somewhere around there. And I think I paid it off within like 2-3 years.
That's
It's amazing.
Wait, NYU. Wait, when did you graduate school again? Sorry.
I graduated in 2018.
In 2018, NYU was 50K.
It was like 55, I think.
Wow.
Right now, NYU's like 95
Yeah,
or like 90
crazy.
for out of state. Yeah.
That's absurd.
Doubled in price nearly.
That doesn't make any sense. Maybe it was 60, I don't know, but that 90 is ridiculous. You're talking about 90 just tuition, or that's with room and
No,
board?
including room and
With
board.
room and board.
I'm trying to remember if the 60 included room and board. I'm not sure if it did or not. I think it did. I feel like it did. But that's nuts. 90?
I'm pretty sure it was 30 for one semester, 30 for another, and then 28 for
No,
housing.
that's crazy. I'm pretty sure my tuition was like 20 to 25K a semester.
Yeah, now it's crazy.
God.
Because like now I'm in
Well-
Fordham and I'm
well-
actually thinking of transferring to NYU.
Yeah.
But then like
I mean,
the price is outrageous.
my big recommendation is not to live in the dorms. Their dorms are ridiculously expensive. I saved a bunch of money by living off campus. And at some point, I started, actually I didn't start paying my own rent. That's not true. But I was working the entire time I was in school. That's the one benefit of NYU, at least, is that because you're in the city, you have all these internship opportunities, and I had some spare time when I was in school, so I was always working. I always had internships. I was always getting paid. So like I was using that money however I could. I was saving it. I was using that to like go out, get dinner or whatever it was. But yeah, after because the first year they require you to live on campus, I remember. But after that, I was like, absolutely no way. This doesn't make any sense. I lived off campus.
You said that you played varsity tennis in NYU.
Yeah.
I played varsity tennis for Fordham.
Nice. Awesome. Do you still play
do
now?
you still play now?
I do. I stopped playing for a while, and I started getting back into it this summer. There is this awesome court here. I live on the Upper East Side in Manhattan, and there's these courts called John Jay Park. So they have one single tennis court. It's a horrible tennis court. It's like got cracks everywhere. We call it the crack. But there's a crew that goes there, and they're all really good. There's like 20 people in this group, and we all show up, and people like rotate. They let people play. It's not like, showing up and hogging the court and that sort of thing. It's, a lot of camaraderie, people of all ages. So there's like one guy who's like 17. There's folks in their early 20s. There's like some dudes who are like in their 40s. Like it's really, really awesome. And the funny thing is the court's not blocked off, and there's like a basketball court right next to it. And so there's like all these kids that like don't give a shit. And they'll all just go play, and sometimes they'll just like run on the court with their soccer ball, and we'll play target practice because we're like, you idiots, like we're like literally in the middle of playing, like get off the court. But it's fun. Like meaning the people that are there are high level. Like you can't play, it's very chaotic, so you can't play there if you're not somewhat decent.
Do you think sports is a good way to network?
Oh, 100%. I met one dude who was a hedge fund manager, another guy was like a venture investor, some other like kids were like super, super smart. Another dude like started like a marketing agency or something. So like met a ton of people who would eventually, potentially be interesting for me to work with in some capacity.
At those
At,
courts,
at
or
those
just like
courts, like that crew specifically. So show up.
really?
Yeah, I would tell you show up. If you played varsity tennis, you're probably good. So show up to John Jay Park on the Upper East Side. Come meet the folks.
Definitely.
We have a
I
we
gotta
have a
get
what
I gotta get the address.
Yeah, we have a WhatsApp group. It's super active. People constantly messaging in there. There's one older woman who's like the mom of the group. She brings fruit all the time, like
Oh
watermelon,
my God.
mangoes, and grapes. Like it's great. Yeah.
I still play right now. Nah,
So
I'd
come.
definitely love to
You
go
got you
there.
gotta come. You gotta come.
Yeah. But I want to go back to when you were saying you had a bunch of internships.
Yeah.
Because I know right now, talking to a bunch of people in my school, that everyone is struggling to get internships.
Interesting.
Like, so like, what advice would you give to someone to have a higher chance of getting an internship?
Tell me what they're struggling with first, and then like so that I can understand. So, are they struggling to get an interview, or they're struggling during the
They
interview
they
process?
said, I have no idea. They literally just said it's tough out there. I don't know if Oleg has a different like opinion on this because he goes to Berkeley, which is like a substantially better school than Fordham.
I
So
Mm,
think
maybe like
we have a lot more career fairs. So, for example, last time we had like one for computer science majors, one for business majors, and a lot of them like line up literally outside the gym where everyone's held. We had like Google over, we had
yeah.
J.P. Morgan over, Chase, and a lot of people get their internships from there. So maybe your school just doesn't have the amount of career fairs that we do. You know.
Yeah, I'm not sure that it's the Fordham thing though, because like when we were interviewing for interns at Debbie, and I was interviewing kids from all different schools, Fordham included. There was actually one girl that we interviewed who was super impressive from Fordham, but she was a freshman and she just didn't have that much experience yet, and I wanted someone who had had a little bit more. And so, I didn't end up going with her, but she was like super persistent. She had messaged me on LinkedIn. She had like written a really awesome email. So she was like she was like one of my top people that I would have potentially gone for. Um, I don't think it's necessarily because you go to Fordham that like our intern that we had for 2 years that we actually hired her full time, as our customer experience lead. She went to College of Charleston, not a target school by any means. I had never heard of College of Charleston. It's basically like a party school for rich kids from the South. But she was a hustler. So that's what I was really looking for was people who had actually like gone and built something. So she had an interesting story. She built a brand of THC enhancing supplements. She developed the whole like recipe herself, designed the packaging, designed the brand, designed the whole thing, marketed it. And even though it didn't end up working out for her, like I was like, that's so cool. Like you actually went and started and built something. The other guy that we hired, who went to NYU, he had his own marketing agency that he started in Canada when he was in high school, and he was doing like video campaigns for politicians, that were running in Canada. I was like, you're like a sophomore in college, and you've already had so much experience. So that would be my recommendation. Is I think right now a lot of the applications that I get that I look at are folks who, they have some work experience, but a lot of it's like retail or they worked at, some restaurant, which is great. You got some kind of work ethic. I see there's like some discipline or things like that, or they worked as a lifeguard, but try to get some experience doing things that obviously are relevant to the job. And you can do that without getting your first job. So I know people say, oh, it's annoying. Like I have to have experience in order to get the job, but I don't have experience. So what do I do? Go build a social media presence. Go build an agency and try to find some clients. Maybe even it's your like parents or your friends or some older folks that need some help doing social media or whatever it is. Find, unfortunately, initially maybe unpaid internships where you could just get your foot in the door. I think, I did a lot of internships. So the way I got my foot in the door was when I was in high school. my high school is super competitive. They actually forced us our senior year to all get internships. Wednesdays, we had no class. Wednesdays, we would go to our internships. And I worked for a nonprofit that had consultative status at the UN. So every Wednesday, I was taking a bus into New York and going to the United Nations and like sitting there for whatever 6 hours and listening to some bullshit. Now I think the UN's like a total like it's a failure of an organization. But anyway, besides the point, I was doing that for free. I worked for another nonprofit where I was like writing grants for them and doing social media for them and all these different things. And they loved me. They didn't pay me anything, but like it was just like a fun summer job. But that was actual work, office work that I could then use to go to other folks and say, hey, I've actually done something before. And I did that in high school. So yeah, by the time I got to college, and then what was my first internship that I did? I'm trying to remember. I think I worked as a social media intern for a souping startup. So there was this guy, he was the former COO of Juice Press. He had started a company making soups. And so the whole thing, he was like, this is going to be the new trend. Instead of juicing, people are going to be souping. It was the stupidest thing ever. But I was like, you know what? A job's a job. I'll do it. And at first, it was a social media job. So I was like doing operations, social media, that sort of thing. And then it turned into a glorified food service job where I was literally like heating up food, serving it to customers, paying at the doing the register, cleaning up after people, like cleaning up downstairs in the freezer. Like it ended up being delivering food. It was awful. So I was like, I need to get out of there. And then I ended up working, doing social media at a law firm. Usually when you're young, when you're that age, most of the time, like social media internships are the easier ones to get because they're like, young people, you know what the trends are, you know how to do this internet stuff, do that for us. So that's like pretty much what I did, and then I just leveraged that experience and the fact that I had studied finance in college to then go get like an actual finance internship. So that was sort of like my foray, even though I had never done a finance internship before. So just start getting some level of experience.
Actually, I'm working on a little project right now. I'm trying to develop this app for fraternities.
Nice.
Basically, a big it's like a big thing in Greek life on campus, right? It's just a lot of fraternities and sororities. They give out bids to get into parties.
Yeah.
And right now you have to write them out. I'm a pledge. I have to write out like hundreds of them every single week to like sororities. Give them out. Give them to friends, and then they have to keep them. They have to not lose them, and then they have to come to us with them, show them. It's a whole thing. They have to line up in like massive. It's annoying as hell. So what me and my friend from Eeks, like an engineer, like you said, I made friends with an engineer.
Yeah.
And
awesome.
What we thought was, why don't we just make this an app? Like this is so simple to make it to quick this up. And so I'm just
sell it to University of Alabama.
Dude, that's exactly the frat life is so great there. But I was just asking, how big was your team for like when you were developing with your CTO? How many people did you have in your working projects and stuff?
It was the three of us, and then we ended up hiring an agency in Argentina. So they gave us like 2 engineers at the time. But by the time we brought on the CTO, we had already raised some money. So Maxime, who was our CTO in the beginning, he came in, like he started full time, like basically around the same time that we raised, it was like $1 million. So it's a bit of a different story. It's kind of hard, like if you don't have cash to actually afford engineers. So if your friend can work for free and he's talented and he can recruit other friends at your college that want to work on the project, that's pretty much, unless you could save up like, I don't know, 20 grand somehow. Maybe you could do that, by the way, by doing projects for people. Like if there's a company that's looking to do some sort of, engineering project and you guys say, we'll build it for you, we'll design it for you, or doing marketing projects or things like that and making cash that way, you can then use that, to fund the business. Which is, I know how, again, our intern who was at NYU, I think that's how he funded his startup. So he left Debbie to go start his own startup. And it's a networking app that helps you find mentors for your to help you with the recruiting process, because he always felt really challenged by the recruiting process, and that he would go on these coffees, coffee chats, and he wouldn't really get much out of it. It was really hard to get someone to go on a coffee chat because it's like, I'm trying to meet you really so that you could like recommend me for a job at this bank or whatever it is. So he found that a really kind of stressful process. So he ended up building an app that was kind of like Tinder for networking. It's called Latte. And so he was doing work on he was working for Debbie. He had his marketing agency. He was doing all these things and, saved up some money to then, start working on that business. And he also was friends with some engineering folks. So I think we're working with him on it as well. So you kind of got to get scrappy. You don't have a lot of capital.
What part of the project takes up the most money, do you think?
I mean, really, the initial MVP build, that requires, because you need people kind of building it from the ground up. It takes time because not everyone is familiar with the APIs that we're using. Like we were integrating with Plaid. The team, I don't think, had ever done an integration with Plaid, so that was something new that they were like figuring out as they went along. So that took some time. So that was really the toughest piece was building the MVP. But it's always, like engineering in general. If you want really, really good talent, that's not you. It's not cheap. I do know of a co-founder friend who ended up finding an agency in Pakistan who built her entire MVP for $7,000. So it is possible. You can find it. I can give you a contact if you want. She got a good deal because one of the people on her team spoke Urdu, and so he kind of was like, nice with them and figured out how to like get them a good deal. If you want to go to Russia and speak Russian and try to get a good deal, whatever, use whatever you've got. You go to Bulgaria. There's good engineers in Bulgaria. So yeah, that's what you gotta try. We ended up going with Argentina because we had already raised money, and then similar time zone, good talent, that sort of thing. But yeah, you gotta get scrappy. So it is possible to do an MVP for way less than what we paid. It's not going to be as nice. It's not going to be as like professional and clean and everything. But it is totally possible.
So the MVP is just to so the money is just to fund the MVP, and then the MVP is what you show to your investors and people.
MVP is what you start doing to get users. So we knew with our product, we knew that we weren't going to be able. First of all, we weren't going to be able to. We didn't have enough money to actually build the MVP. We needed to raise money to build MVP. So I paid like 10 grand for us to build a prototype, the Figma prototype, not the actual functional thing. So we went to an agency, I think it was in India or somewhere else, and we paid them 10 grand to build that. So we used the Figma prototype to go to investors and raise money. I think today it's a little bit harder. I think you probably need a product. But what you can also do is, depending on what you're building, I mean, you're building a consumer app, so I think you would need to build the app first and start getting some users and use the fact that, we have these initial users and they love the product and some that sort of thing some feedback to go to investors. If you're building a B2B product, you don't need the product built yet. You just need letters of intent, right? Go to potential customers, say, this is what we're building. Is this something you want and would be willing to pay us for? Yes? Okay. Can we sign a non-binding letter of intent that says this is how much we're interested in buying this, here's how much we're willing to pay for it? And you specify it's non-binding, meaning they're not signing a contract to pay you. They're saying like, we signed this document because we're really interested in what you're building. And I've seen people be able to raise money using LOIs for B2B businesses just on that basis. Because now they go to investors and say, hey, look, there's all these companies that are super excited about what we're building. We just need the money to build it. And then they'll invest, and then they'll be able to build it and sign the actual contract. So, but with a consumer app, it's a little bit tougher.
Yeah, I mean, I think it's really easy to get these people to work with us because most of them are in my frat and they're in my pledge class, and they're all just like, oh, this is dope. Let's just work on this for hours. We've just been grinding for the past couple of days,
Yeah, the other thing you could do with a consumer app, which is what we actually tried doing, was because we only had the Figma prototype, we were like, oh, this might not be enough for some investors, we started building a wait list. So literally like put up a website with like some mock-ups of what the app does, really, really clean, really catchy, and or like put in your email or your phone number in order to sign up for the wait list. If you're able to get a sizable wait list and you say, hey, look at the demand I got, like that's also a good point you can use to go raise money.
Yeah, no, we definitely have to try that. I didn't even think of that at the get go. Yeah, wait. We're still figuring out. Like, do you think it'd be more of when you monetize it, it'd be with consumers, or would it be like to the fraternities would license the product and then use it for their own little like parties and stuff?
It's a good question. I'm not, I mean, the fraternities definitely have more budget to pay from
That's
what
what I
I
was thinking.
understand than consumers. I don't know that consumers would be willing to pay unless they felt that it would get them some edge in order to get to the fraternity or sorority of their choice. Like, I know that University of Alabama, at least from the documentaries I watched, a lot of these girls are willing to pay thousands and thousands of dollars to counselors to like help them whatever, like dress the right way or talk the right way or whatever it is. If you can somehow build a cheaper version of that advice or that network inside the app, I think that's something people would be willing to pay for depending on the school that they go to. But otherwise, yeah, I think probably the fraternities, maybe even the universities themselves might be willing to sponsor and buy licenses. That's also another option.
And on that note, how did you what was the strategy to market your company?
Our tagline is "Get paid to pay off your debt." People like that a lot. So
Just
that
instant
it
click.
was, well, so it wasn't instant, meaning when I tried to figure it out, I went to one of my founder friends that we had invested in that got, a ton of users, and I asked him, how did you market? What did you do? And he basically said, you need to find that message that really, really resonates with people. Theirs was build credit with debit. So it was a debit card that helps you build credit. So build credit with debit, that was that message that ended up resonating with people. So I was like, okay, so I need to figure out what that message is for us. And so I ended up putting together a bunch of like paid ad mock-ups, and I didn't put a lot of budget to it. The goal, like on Facebook and Instagram, the goal was not to use paid marketing to get signups at that time. The goal was to figure out which message would get us the highest conversion, right? So the idea was that was essentially the test to see like what messaging is going to be the one that resonates with people, what gets us that cheapest cost. And so once we figured that out, we ran with that everywhere in our organic marketing. So that, and then setting up a referral program. So especially if you set up a wait list, you can then set up the wait list in a way where if you refer people, you can jump up spots on the wait list, right? Especially if people start getting excited about it, they're like, oh, like how do I move up? So then you build in a referral program into that as well. And then maybe even if they refer a certain number of people, they get other incentives like cash or things like that. So you have to be careful with that though, because sometimes people will just like refer bots. So you need to figure out like how to, keep out fraudsters. Especially for us, it was important because the app was, rewards for debt payoff, and we're paying people money. So we had some of that. But yeah, those would be some of the things I would think about. But definitely build a website landing page that people could go to, see mock-ups of the product, and sign up for it in advance before it's launched.
And by organic marketing, do you mean just like website and just like social media
Website,
presence?
yeah, social media, starting to, by the way, there's so many of these I've been like now seeing because I've been looking at all the Bama Rush TikTok things. I know there's like pages that collate all of the different like hot girl content from all of the different universities. You guys have probably seen that as well. So like, yeah, reach out to those Instagrams or TikTok pages and be like, hey, we're building this app. Maybe they might ask you to pay something, but maybe it's, maybe that's a budget that you can afford just to even like get the word out there. And especially if, based on the people that are probably following these pages, like those are the people who would want to sign up for your app. So think about creative strategies like that. Nowadays, it's hard to do anything for like really, really free. But you're lucky because you're on campus. So like you have a audience that's all in the same place. So word of mouth is really strong. If you start setting up, let's say, campus ambassadors on college campuses that have really strong fraternity and sorority life, they'll share your app without you having to spend a lot of money. So you have that benefit. We were never really like, we never wanted to build like a campus strategy because our product isn't necessarily for students.
Yeah.
So we never did that. But I know I know a company called Fritch that ended up doing that, and they got up to 70,000 users now. So I would say that having a campus strategy and having ambassadors all over the country, super helpful. And by the way, you don't even need to pay them anything. Most of the people that she got, I think, as campus ambassadors were people that wanted that internship experience, right? They wanted to show something on their resume. They had no experience. Back to the question about how to show that you did something. Oh, I was a campus ambassador, and I recruited people, and I did marketing campaigns, and I did all these things. And yeah, maybe they didn't pay me, but that, the company doesn't need to know that, and I don't care. I just wanted some experience, and I wanted to do something. So she was able to get kids for free who were struggling to find other internships, wanted to just get, that first
Something.
the first set of experiences. So, and they were motivated because the job for them was open-ended. It was do whatever you can possibly
As much as
do
you can.
creatively, to get users.
Hell yeah.
Who was the person that had the campus strategy?
Her name is Katrine. So she's the CEO of Fritch. The app is called Fritch, stands for fucking rich. You guys can look it up. Basically, what the app does is it allows you to kind of compare yourself to your friends. So they ask you questions about your money. So like, do you invest? How much do you invest? How much in savings do you have? Do you use these apps or whatever it is? And they show you how your friends answer. So it kind of gives you an idea of like, what are your peers doing, and like, where do you stack up when it comes to your money? She really focuses on college students and Gen Z. That's their whole market. So yeah, to look into it.
Is she on LinkedIn? Maybe we could get her on the podcast next.
Yeah, I can ask her.
Oh, perfect. And
It's
then
like competition.
competition?
Yeah, like, I mean, you're competing with like other university students. Like, damn, I'm like
Oh,
20K behind
like
this
that.
person. Let me get my money up. You know what I mean? Is
Yeah.
that kind of the psychology behind it?
I think it was more like that before, for sure. The app started out actually as like spending challenges. So you would invite your friends,
Oh,
and then you would compete in whoever would spend less money on like going out to dinner, and whoever
Oh.
would.
oh,
Yeah, no, spending challenges meaning not spending the most, spending the least.
Yeah.
oh!
I
I
was
thought it
like,
was spending the
hold
most.
on.
No. Spending less money. Because the idea is like, let's save money. Let's be good with our money. So that was originally what the app did, and I think they ended up shifting away from that to just like the questions and the polls and that sort of thing. I haven't looked into it in a while, so I don't know if they have new features, but that's my understanding of what they're doing now.
And before you guys were talking about marketing, like what do you think is the most lucrative way to market? Do you think it's organic, or do you think you should start with ads? Or
It depends on the way that you monetize. It depends on how, expensive the product is. Like if you, let's say, are building a direct-to-consumer product, like a packaged goods product. Like I have a friend who made a tortilla chip company, right? And so his strategy has been, paid marketing, also getting into retail stores. Like he's in Erewhon now, somehow he got in there, but it's like a high-end brand of tortilla chips that doesn't have seed oils, right? They're fried in beef tallow. So the whole thing is like inflammatory seed oils, and it's more expensive and is bougie and that kind of thing. So for those kinds of products, if this is how much I could sell the product for every time people buy, and this is how much it costs me to acquire the customer, and like you figure out how to get a really low cost of acquisition, you could just go straight into paid marketing and then figure out organic at the same time as people start to like really love your product and buy into it and tell their friends and that sort of thing. I think if you're not immediately monetizing, then it's really hard to spend a bunch of money on paid marketing, because you're spending a bunch of money on paid marketing and you're not earning any revenue for it. You don't know what your LTV to CAC is. So yeah, organic is always more lucrative if you can get it right. The trick is how do you crack organic marketing? Yeah, I'm not sure that we've yet figured that out totally. I think we're starting to. I think referrals is a big piece of it. You think about the way Robinhood grew, a lot of their growth came from referrals, came from word of mouth. people who were really excited about the app, who didn't, at the time, zero commission on stocks, on trading was a novelty. Every brokerage out there charged commission for you to trade stocks. Robinhood was the first one who said, we're not going to do that. So that was, that was a big, I guess, transformation. So a lot of people were excited about it. And they built a really good referral system where, like, if you referred a friend, you would get a free stock. And so people wanted the free stock. So again, it's not free marketing. It is organic, but you're still paying them for the referral. So it's tough. There's very few companies out there that really are able to get a massive amount of folks for free. I think probably the only one in recent history that I know of is ChatGPT. Yeah, but I don't. They just built like a crazy, interesting, software, and they were able to get a bunch of press and get a ton of people on Twitter using it, and that's what happened. It was a lot of word of mouth, but yeah, organic marketing is really tough. I would say right now, if you can figure out like a really good content strategy, whether that's on Google or whether that's on social media, that's probably the key in the beginning.
In Debbie's case, like the marketing that you guys have done, I'm assuming it's like the social media one. Have you ever tried to provide value, like just giving free value and advice on how someone can improve, and then just tell them to use your app for an easier thing? Like, for example, like when you told us that it's easier to get loans from credit unions, or it's like cheaper. If you said that on like your TikTok, maybe that could help with something.
Yeah, so that's the goal now. That's what we're going to start doing now, because I think we realize that just entertaining people is not enough. Like, they'll follow you, but they don't necessarily convert, or they don't know that you have an app or are actually trying it out. So I think we're going to start doing more of that. The challenge with that is that, our interns don't always know everything there is to know about money, right? So I still have to I don't have the time to do the marketing and do operations and do finance and do legal and do all these things. So at the end of the day, I would probably have to hire an outsourced team to do our social media for us. So it still wouldn't be free, right? I still have to pay someone to do it, because I don't have the capacity to do it, even though I'm the one who has the knowledge of like all these tips and tricks and hacks and things. So I still have to spend a lot of my time giving that knowledge over to her so that she knows what to talk about.
Wait, so who's the one in charge of your marketing right now?
So
Is it the intern?
So I'm in charge of the overall marketing strategy, but all of our social media content our intern does. So her name is Maita. We every week we have our social media weekly meeting. We go through all the content that we are planning for the next few weeks. I give her ideas of like, here's what's happening in the world, or here are some trends on the money side, or here are some things we should be talking about in pop culture, memes we should do. And then she designs all of it, and then I go ahead and approve it. Everything else marketing related, that's paid campaigns, swag, events, I manage the overall strategy.
Do you think you have a problem with content creation? Is that what you're saying? Like, you don't have the time to be able to create that much content and put it out?
Almost just to check it.
No, I don't think so. I think the bigger problem is, time for me to check the content and time for me to come up with other ideas, because I think that I have a lot more knowledge than necessarily an intern does about money. And so I still have to give over all of this information and knowledge to her, and I still have to check to make sure that all of it makes sense and is accurate and correct and all of that. So that's more of the challenge. She's amazing at creating content. If I told her exactly what to write and what to say, then she would blow it out of the park. I just don't have the time to do that.
Have you ever tried to like make a podcast on just like one podcast a week that's like an hour long on advice for people, and then you can just clip 15 different clips from that one, and then just 2 every day for the week?
I literally started doing that 3 weeks ago. So that's the new strategy that we're trying out, is me recording. So basically there's a YouTuber, his name is Caleb Hammer. He does this bit called Financial Audit. He brings people on.
I've seen that.
Yeah. And he
insults people.
Exactly.
What are you doing?
He completely
He's
roasts
so
them.
funny.
Exactly. I think that his content is super inflammatory. I think it captures people. Like I think people like watching like that train wreck. At the same time, and like I think they feel like, oh, he's giving them tough love and that sort of thing, but he doesn't actually give them a plan of like what to do next, and that's the part
Okay.
that I don't love. And so what I wanted to do, and the idea was to interview people to do what he does, but then to actually give them like a real workable, reasonable plan that they can actually accomplish. Because basically his whole thing is like, you're in deep shit. You need to turn your entire life around. Like, you can't have any fun for the next 6 months. Like, you're not going out a single time. You're not partying. You're not doing anything. You're sitting in your apartment and you're just saving money. And I'm like, that sounds awful. And yeah, this person just spent a bunch of money, but like, it's like if I told you that you need to start working out 5 times a week starting next week. And if you're not working out at all right now, like you're not going to do that. You might do that for a week and then you're going to give up after that because you're
Yeah.
like, this is too hard. Maybe
Too
if I
radical.
told you, yeah, it's too radical. If I told you once a week, maybe you start building that habit in 2 months and you're now working out once a week, every week, and you build that into a habit. And then you layer on another day and another day. And then maybe 2 years from now you're working out 3-4 times a week, on a regular basis. It's going to take you a longer time to get there, but at least you're not going to give up along the way, or at least that's the hope. And we've seen that work in behavioral psychology. He does not do that at all. He's just like, you got to go
Give up.
give up, go cold turkey. You're an addict. You just need to stop. So I think that there's a different way, and I get why he does that because it gets him views, and it's super smart for him to do that, for himself. I want to take a different road. So the answer is yes. The other thing I want to start doing is I love watching Cody Ko react to Reddit, like to subreddits. And I think it would be smart if we did videos where like I was going through like personal finance subreddits and going through the questions and answering them with my own opinion. I'm not as funny as Cody, unfortunately. I'm not as interesting and exciting as him, so I don't know that I am going to become some massive influencer. But I do think it could get us a lot more views and a lot more organic traffic.
I think.
Have you already started? Oh, go ahead.
No. I just want to say, like, I think all good content creators have like this one message they keep repeating over and over and over again. Like, for example, Alex Hormozy, he always has these like 3 pillars of like hard work, get money, find a customer. For example, with you have this consistent message of like it's just good habits. They just have to reinforce.
Yeah.
And so if you just get on a podcast, get on a subreddit, and you just keep saying it'll
Same thing
work
over
great.
and over.
You have your message down pat. Like I would listen to you talk content about all day. So
Thank you.
keep going. Yeah.
Oh, that makes me feel so nice. Thank you.
Have you already started like recording it?
Yeah. We actually have one video out there already of me.
I'm on a TikTok.
The first video was of me reacting to Caleb's content. So the next video I actually went on, I didn't realize that he would recruit people via Backstage. So he actually did one video where he broke down his budget and like where he was spending money. And one of them was he actually recruited some of the folks on his podcast from Backstage. And I had never heard of this website. And basically it's a website where you could post casting calls. And I was like, oh, sick. Because it's really hard to get people to talk about their money. But right now, because there's a writer's strike, all these actors are out of work. And they all are like losing a bunch of money, and they're literally willing to do anything right now.
So it's actors, like it's not real.
No. Some of them, not all the folks he gets from Backstage. Some of them are actors, but also a lot of actors do other things on, as their full-time job, right? They're like baristas, they're mow lawns, they do, because they're not making a ton of money acting, so they have to have a day job. So like anyone who's an actor pretty much has a day job. So I got saxophone players, I got all sorts of people, but like I got at least like 20-30 applications, which is awesome because I'm explicitly telling people I will dig into your money and what you're spending money on and what your balances are and how much credit card debt you have and all that really nasty shit. So it's tough to get into that with people, and they're willing to do it. It's great.
On the content side, what do you think is the toughest part? Like, is it the time that you're struggling with?
Yeah,
Or
it's
like,
really time. It's mainly because I have other priorities in the business. And for me, like, marketing is not my expertise. It's not like what I have a ton of experience doing. I've learned on the job. I've done all the marketing, like our entire website, our whole wait list, like all of that. Not to toot my own horn, was me. That being said, I think if I had some experience, we would be much further along on the marketing side. Like I would have already been doing this content earlier, because I think for a while I had this aversion to making myself the face of it, because I felt like if we're a brand, then we need to not have a human attached to it, because then what happens is that human is no longer part of the brand. Then we have to like figure out some other. So I think Duolingo is genius, right? Because the face of their brand is their owl, and it doesn't matter who the fuck is in the owl suit. They can find people to go in the owl suit. So I had wanted Debbie, our character initially, to be that face of the brand. I didn't feel like that went over so well. Like it didn't work for us. It didn't catch on. So that frustrated me a little bit. We do still include her in a lot of the marketing, but then at some point I realized I'm like, I have a lot to say, and I think people will listen, and like I'm going to be in this for, like, I don't see myself leaving anytime soon, so I don't think there's a huge risk of me like no longer being part of the brand. So I should just start making content. At the end of the day, like Dave Ramsey built a massive business just by the fact that he is the face of it, right? And he sells his app and his courses and all this stuff that at this point is not even him anymore, but he still is like the marketing engine for it. So
Yeah, but there's like two different ways you could go. Like one is with the personal brand, but then that way you don't get the thing that you want, where it's like Debbie is the face of the brand.
yeah, it's tough, because then I don't want people thinking I'm Debbie also, right?
Yeah.
Um,
Now that I think of it, that could be a problem.
it
Did
could be
you
a problem.
say you made the website?
I didn't make it. I didn't code it, but I did, like, I found the designer, the developer, what to do, like the idea of the layout.
It is
Our
beautiful.
Thank you. Our designer actually, he's a Webflow developer and designer. He designed the website with some of my
Webflow?
guidance in Webflow. Yeah,
Dude,
he's
my
in
God.
Ukraine. He did the whole thing. Like, the guy is a master. I love that guy. He's amazing. And like he was in Ukraine, like in the very beginning, he was out of work for, like, not out of work, but like he was out of commission for a while. Like we couldn't work with him because he was like literally trying to get like out of the line of fire. But yeah, he's great.
No, yeah, I'm actually a big UI UX guy, so I'm the one doing all the how the app looks, how we want to market it, the design of the logo, and it's just really cool to be involved in the process and just to, because I think one of the main ways, and I think your app does it really well, is just how it looks. Like it's appealing, it's clean, it sets the tone for the overall like, I don't know, feeling of the
And
app.
it looks fun to play with.
Yeah.
Right? Yeah. It's like your app. You scroll down and you can see like all these rewards. You can see all these numbers pop up. I think you did a really good job at like hiring people to convey the message. Yeah.
Yeah.
What was going through your head when you made when you made the website? Like, what
So-
were the things you were trying to make sure it was done?
Yeah, so we had someone originally who built our original website. It looked very different, and I think it wasn't as clean. It wasn't as fun, and I really wanted someone to come in and like be creative. Like I didn't give him that much guidance, to be honest. Like I wanted to bring in someone who was really creative and who would run with it and would like have his own ideas. And when I looked at his portfolio, I saw that like he was like really good with animations and like color schemes and coming up with the layout, and I was like, this is a guy who I think like he's gonna take my feedback, my very vague feedback, and he's gonna run with it and do something really cool. And that's exactly what he did. And again, I could have been wrong. Like we got very lucky with him, but that's what I wanted. I was like really tired of having people that like I would have to tell them exactly what I wanted and every component, and I had to come up with the design and the layout. I'm like, no, I want someone who's like, they have a vision. They're the creative one, because I don't have the mind space to be like coming up with all that.
Yeah.
Oh, for your content strategy, you should do a little series where you take someone out of debt. Like part 1 of 60 from this guy going from negative
Love that.
500K to like positive 20.
That's awesome. I freaking love that. I might ask one of our users if they're willing to be part of that journey. I think it's a great idea.
You could check
You
in
could
with them
create-
like every day.
Yeah.
Yeah.
That'd be
You
dope.
could create tons of content from that, and it would be like the part series, like part
Yeah.
1. It's like, you've seen the TikTok where it's like day 1 of mixing 1
Yeah.
egg and then day 2 of mixing 2 eggs.
Oh my God. I've never seen that. And now I need to know what the hell you're talking about.
Yeah, it's like he makes a little pasta, but one day one he goes, "Welcome back to me doubling the amount of egg yolks I use for pasta every single day."
That's a
And
fact.
then in the end, he gets like 1,000 egg yolks, and then he needs like people to help him mix it.
Oh
Then he
my
just like
God.
donates it all, and he grew his following like crazy quick as well.
I need to find this guy. I need to look
I,
this
th-
up.
I think the thing
All I've
with
been
Dave,
watching
oh
on
sorry.
TikTok recently, all I've been watching on TikTok recently is like this hot guy making pastries from Italy. Like he's just so sensual in the way that he like kneads the dough. It's great. I highly recommend. And the desserts look amazing.
That could be another series as well.
Yeah. Well, not
I think
me. I'm not making them.
series nowadays do really well. I saw this one kid who did like this. He's like 12, and he was like day one of every single day that goes on, I do the push-ups of that day,
Yeah. Mm,
Oh,
and then he had like 200K followers.
nice.
because he's like 12.
Yeah, but then there was
How many
another kid who
12 year
did
olds
like
did
some
that?
bulking video, like day one, day 25 of bulking, and then he grew like 10K in 3 days.
Yeah. There's a lot of Instagram pages of people following their own debt payoff journey, right? They have their own pages where they're like marking like where they're at in their journey. Some of them are anonymous. Some of them, do say who they are. So that is
Accountability.
actually a huge trend. It's the same way that people are like marking their weight loss journey, right? They have a page where it's like, oh, it's like motivation. It's not just for other people to follow them. It's also for them to have motivation and accountability for themselves, where they know that somebody's like waiting and watching for their update and like how they're doing. Um, so, yeah, I think it's a great idea for us to feature some of our own users and bring them onto
Yeah,
our platform and have them go through their journey.
I don't know how you document that though. That would be really difficult.
I mean,
Yeah,
it's like a big selling point for Dave Ramsey, right? Like the guy who shouts at people. His thing is like, it's
he's
just
the
a
other
feel
guy
good.
that shouts at people.
Yeah, he's a different guy. Yeah, but he like when you log onto it and you look at his videos, like, oh my god, these guys are so like ass at managing their finances. I'm so much better than them. But it's never like it's always like you're hitting on the person.
Yeah,
But if it's like, oh, this guy did this in like 60 days with this app, maybe I can have a chance too if he's this badly in debt, you know. So I feel like that's a great selling point for you guys as well.
yeah.
No, yeah, Shan, that's a great idea.
I, maybe you could even like incorporate Debbie into that. Then you can actually build the brand
Yeah,
with
Yeah,
I would have
huh.
to. Even like ask them like, how they're using Debbie as part of that journey.
Yeah, definitely. Well, we want to be respectful of your time, so thank you so much for
yeah.
taking the time.
Thanks,
I
guys.
know this was longer than expected, but
This
I'm
was
gonna
awesome.
end the yeah, I'm gonna just pause the recording. So where is that? Oh, right here. Never mind. Never mind.